Hello my fellow investors and welcome back to another stock analysis video. Today guys, let's actually do analysis on the company Tyson Foods. I have yet to do this one guys, and I figured, you know what, their earnings is actually coming out on Monday before open, so I figured best time to do it because after their earnings come out, I will do an analysis as well on their earnings and maybe change a couple things on my analysis today to see if it is on par as to what we are seeing and their direction. So with that said guys, let's get started with this analysis. Before we actually get started with this analysis guys, let's actually see what analysts are actually projecting when it comes to TSN. The EPS normalized estimate is expected at $1.72, EPS gap estimate $1.73, revenues of $13.5 billion, and as you can see, they're actually expecting this to be down. Like, they're not expecting them to actually beat or even match these kinds of estimates, so very interesting. We may actually see a fall when it comes to the share price if this actually happens. Coming now into the calculator guys, we got the ticker symbol for TSN, market cap of $24.24 billion, a PE of 6.04, which is actually very tiny for a current share price of $67.41. Taking a look at this graph guys, on the 1 year, we can see that they're down almost 19%. On the year to date, they're down 23.22%. 52-week ranges are within $62.94 to $100.72. So with a current share price of $67 guys, this may actually be a fairly good price, seeing that it is on the lower side of that 52-week range, as well as the PE being this small. Now they do pay out the dividend of $1.84, which is a yield of 2.73%, a payout ratio of almost 20%, which is actually really good, a 5-year CAGR of 15.38%, which is massive, basically saying that within the past 5 years, they have grown this dividend guys at an average rate of 15.38%, a 10-year growth of 10 years, and ex-dividend day is actually coming up the 30th of this month. So if you buy before the 30th of this month guys, you will get this dividend of 46 cents per share. Payout date is actually going to be on December 15th, and they pay their dividends quarterly. Now, based off of the current shares outstandings that they have, they pay out $661.66 million guys, which is actually really tiny as well, because if you take a look at the 5-year average free cash flow, after this $661.66 million is paid out, they're still left with $1.31 billion in their 5-year average free cash flow. And as of the last year's free cash flow, it is $2 billion. These payout ratios are 25% for the last year's free cash flow and 33.6% for the 5-year average. Basically saying that they could 100% continue to give out this dividend and even increase it if they wish to do so. Coming now into the fundamentals, net income, we got $1.78 billion to $3 billion, increase of 72%. We do see an outlier here guys 4 years ago where they just shot up massively and then they came back down to earth, but even during COVID, they still did fairly decent. So I'm actually going to give this guys the bare minimum of around like a 75%. Coming now into the free cash flow, we got 5 years ago of $1.53 billion to 1 year ago of $2.63 billion, increase of 72% on the 5 year with an average of 1.97, essentially $2 billion guys for an average 5-year free cash flow. Now, the main thing I have to notice here is that they did fall from 4 years ago to 3 years ago, going from 1.76 billion to 1.25 billion, but you can see they nicely recovered 2 years ago. Definitely something to do more research on guys, but as it currently stands, this is looking fair enough for me, so I'm going to give it another 75%. Coming now into the revenue guys, really nice increasing, consistently increasing as well revenue. We got 5 years ago of 38.26 billion to 1 year ago of 47.1 billion, increase of almost 23%. As you can clearly see, really nice steadily increasing year over year. There hasn't been 1 year where they even went down a little bit, so for that reason I'm going to give this a 100%. Coming now into the total assets minus the total liabilities, this is also looking really solid as well guys, every single year consistently increasing, and as of today they have $19.5 billion in this difference. Average assets is around 33.81 billion. Average liabilities is 17.88 billion. And doing this difference, we get around $16 billion in the positive. So seeing that this is consistently increasing, guys, I'm going to give this a 100%. Doing now the cash flow minus the liabilities, essentially the same thing as the assets minus the liabilities, but now using the cash flow, because remember, cash flow is what companies use to pay out that dividend, to buy back shares, to lower debt, which is part of their liabilities, and to make acquisitions, and to of course overall grow the company. So really important for us to see this value at least getting closer and closer to zero. And you can clearly see as of 1 year ago, they're at negative $14 billion. Their lowest was actually negative $17.8 billion 3 years ago, not even during COVID. 3 years ago, negative $17.8 billion. That's actually really good. From 3 years ago onward, they have been increasing it closer and closer to zero. Average cash flow minus the average total liabilities, we get negative $16 billion. So for that reason, guys, I'm actually going to give this a grade of around like a 80% or so. Coming now into the shares outstanding, guys, this is the one that essentially tells you if the company is diluting you as the investor. And on top of that, guys, companies that pay out a dividend, the more they issue shares, it actually gets harder and harder for that dividend to be paid out because there's more shares to go around, right? Therefore, they have to pay out that dividend even further. So it is a lose-lose overall, especially if they pay out a dividend to issue shares. Now, Tyson Foods doing a pretty good job actually. 5 years ago, 368 million shares to today of 359.6 million shares. That is a decrease of almost 2.3% in the 5 year, and another decrease from the previous year to the current year of 1.5%. And on top of that, if you take a look at this, guys, every single year they are consistently decreasing it. Actually, my mistake. No, they have not. So 4 to 3 years ago, they kept it the same at 366 million. And then 2 to 1 year ago, they kept it the same at 365. Fairly interesting, because if this trend continues, then probably they'll keep it the same next year at 359.6 million shares. So that's just my theory. We'll see where that leads, but nonetheless, keeping shares outstanding flat as well as decreasing it is a win-win for me. Therefore, I'm gonna have to give this, guys, another 100%. And lastly, when it comes to the cash and equivalents, they currently hold $1.1 billion with an average of $1 billion. Taking a look at the weighted grade, guys, we gave the net income 75%, free cash flow 75%, revenue 20%, assets minus liabilities 100%, cash flow minus liabilities 80%, and the shares outstanding of 100% for an overall grade, guys, of 87%. This is actually looking really good. I'm not even gonna lie. So far, all their fundamentals are looking okay, if not like amazing. Definitely do have to do a little bit better though when it comes to the net income and the free cash flow, and that was only like 1 year that was the issue really. Aside from that, it doesn't look too bad. Now let's actually see if at the current share price of $67.41, this is a good buy. Remember, every single investment is the present value of all future cash flow. How much are you willing to pay for something today to get X returns in the future? That is essentially, guys, what discounted free cash flow is. Let me remind everybody, these numbers that you're about to see right here, this is not telling you guys what the share price is going to. This is telling you what the company should be worth, okay? Based on, of course, revenue growth, projected share buyback, and the required rate of return, which I like to keep flat at 10%. So for the revenue growth, guys, coming over here to Seeking Alpha, we can see that the forward revenue growth, it's estimated at 7.44%. Now, I personally don't think that this will occur. I like to be conservative when it comes to things, so let's go with 5, 6, and 7% for each assumption for the revenue growth. And for the predicted share buyback, we saw that in the past 5 years, they've done around 2%. So let's put in for the median 2%. For the low one, let's put 1%. And for the high one, guys, let's put 3%. Now we get the target share prices, not adjusting for debt, of $93.72 to $102.41. Now adjusting for debt, this comes down a little bit because they do have a lot more debt than they do cash on hand. So now the target share prices are $76.55 to $84.89, adding a margin of safety of 5, 10, and 15%. This puts me between the ranges of $65.07, lowest assumption, highest margin of safety, to $80.65, the highest assumption, the lowest margin of safety. Overall, guys, with the current share price of $67.41, 41 cents. You can see there's only one number here that doesn't fall in line with this share price right now, and that is the lowest assumption, the highest margin of safety of 15%, with a share price of $65.07. But you can clearly see $65 to $67, it really isn't a lot. So in my personal opinion, this is looking like a pretty good buy today based off of my assumption. Now, just because it is a good price for me today, guys, doesn't mean that it is a good price for you. You guys saw me input all of these numbers, and all of these target share prices change in accordance to what I like. Therefore, because this is not financial advice, please have this calculator. It is available for free. The link is in the description below. Have this calculator, make your own assumptions. You guys could pretty much change all about it. You could change the required rate of return. You can make it more, you can make it less, change the revenue growth, the predicted share buyback, change the margin of safety, right? Pretty much change everything. In that calculator, you guys will also get the weighted grades as well. If you do not agree with my grades that I gave it, give it your own and see where you lie at. I also have my book value calculator for companies that don't have free cash flow, and a reevaluation calculator for REIT companies. And also, guys, I also have a dividend tracking sheet, which I have shown on the channel before, and I do plan on showing it a lot more in the future. But I also have this if you want to track companies that pay out a dividend. So have these calculators, guys. It's for free. All I'm asking for in return is just help me grow my channel. Like, subscribe, comment. I have no sponsors here. I don't think I'll ever have a sponsorship unless it's like food related or something like that. I'm not really a fan of sponsorships. I mean, look at what just happened to all those people that were sponsored by FTX, and now FTX is just completely going bankrupt. So that's the reason why I don't like sponsorships. If I do a sponsorship, it'll be like food related, be something useful, right? The best way that you guys can help me grow over here, this is pretty much like a solo endeavor thing. It's just by like, subscribe, comment. That's really it. Help me with the algorithm. That's pretty much it. So, and of course, share with people who may want to learn how to invest using a fundamental basis. So thank you so much for everybody who have subscribed so far. I really do appreciate it, and I love making these kinds of videos. That's why I give out these calculators for free. And of course, speaking of this dividend, guys, let's see. They do pay out a dividend of $1.84 per share in annual dividends, putting in $5,725. This nets you 84.93 shares, which in accordance to my calculator, guys, this is looking like a pretty good price to buy it at. This nets you guys $156.27, not too shabby. Quarterly dividends of $39.07 and a monthly of $13.02. So not the $200 I would normally like, but you can see the calculator is telling me that it is a fair, good price to buy it at today. So it is what it is. I personally think it is as well. So $156, it's a pretty good dividend amount for me. All in all, Tyson Foods is actually a company I never looked at. Now that I'm looking at it, I'm half tempted to put money into it because, well, the fundamentals are really good, guys, right? They're really, really solid. And let's face it, people will continue to eat chicken. People will continue to eat food in general. So I don't think that they're ever going to go away, right? It's just one of those companies that people will always need. So, my personal opinion, I think it is a good buy today. Obviously, do your own due diligence and come back next time when we're going to analyze their earnings report. That pretty much does it for this video. Like, if you like, comment, subscribe. It really does help over the algorithm on YouTube. You guys can follow me on my new tech sites. A link in the description below. So, with that said, peace out, and I will see you all in the next video.